Hey, welcome all. Coleman Report live from Rancho Mirage. Sorry for this setup here, but the only way I can hear Lance. Lance, can you hear me?
Absolutely, Bob. And I'm here in the trenches just working. You guys are out at Rancho Mirage.
Well,
great time.
Yeah, I don't know if you want to be here. It was 115 here yesterday. Currently,
oh my goodness.
Yeah, no, it is not fun. And 115 is a lot hotter than 105. Hey, we got a lot of good information. Just got out of the general session with SBA, and we're bringing up to that. But first, let's start with some poll questions. Do you use lender match?
You know, Bob, I'm hoping we see a lot of positive responses here. Lender match is a great opportunity to find potential SBA loan prospects. It's like any other loan officer. You're going to have to dig through 20 projects to find one good one, but there are opportunities.
Well, the reason why I lead off with this poll question is they're announcing some changes to it. They've done 200,000 loans through lender match. I just go into it now. The big change they're going to do is, as Lance was saying, you have to sort through all of this stuff. They're going to allow you to filter. You're going to be able to filter by county, by dollar amount, by use of proceeds, by whether you want to use startup or how many years you want them in business. So it's going to make it much more user-friendly to the lender. They're going to be announcing that in the next couple of weeks. If you're not on it, Lance and I strongly suggest that you make yourself available to that. To date, they've done 4.5 million email leads to lenders. So deals are being done. So take advantage of that.
Yeah. Bob, you absolutely, being somebody that's used lender match, and they have had the filter for geographic location, makes a huge difference when you use the filters that SBA puts in place. You're going to get at least a potential borrower in the location you want. You can pick industry type. It is a place to find opportunity.
Also, they said they're going to be coming out, Lance, you'll find this interesting. They're going to streamline it. So once the lender says, hey, we have an interest, send us this documentation, they're going to be able to streamline to get that guarantee in place. So it's going to make it much more user-friendly for both the lender as well as for the borrower. And as they said, and really what the intent is to create a product that can compete successfully with the fintech lenders. Any SBA small business borrower can go online and get money within 24 hours and pay 50, 60%. So they're trying to make a much more reasonable alternative for the borrower. Let's go to the second poll question.
Bob, I want to make one brief comment. I have always thought if an SBA participant lender could get a true online platform, for instance, for SBA Express loans, you would have a tremendous advantage with small business borrowers throughout the country. So I'm glad to hear the enhancements.
Yeah. Is your portfolio, your total outstandings, greater than $10 million? And this is 7A.
Ours is a tad north of that number, Bob.
And the reason why we ask this question is if you're over $10 million, you are going to be subject to the new OCRM rules. And they specifically use the word regulation. Tomorrow, in the Federal Register, they're going to announce the initial regulations that came out of the 2018 Lender Oversight and Reform Act. And they're going to talk about what OCRM can do. Specifically, they're going to talk about who they are regulating. It's very specific. They're going to start regulating third party, which is code for loan brokers, and there are now options for monetary fines. So all those regulations are going to come. Obviously, we will cover that. Also, this is very interesting, Lance. They've made a point that for the first time, the SBA and the OCC have done a concurrent review of a lender. That's never been done before. So what that means is the OCC came in and reviewed a bank, and SBA came in and they did a co-partnership on SBA helping the OCC to understand what they should be looking at. Ladies and gentlemen, we are truly entering a regulatory environment.
Well, I think there's some great advantage, Bob, to having a concurrent exam from your regulator and the SBA, because quite often your regulators will make recommendations on your SBA portfolio that make no sense.
Right. So. Right. And let's see, I think we have, are those the two poll questions?
One more.
Oh, one more. Go ahead. And this is from our webinar yesterday. What is the number one reason for an incomplete credit memo?
Bob, all of these could potentially be good reasons, but I think I know which one, or at least in my mind, is number one.
What do we got, Joseph?
I'm in line with everybody else. Credit elsewhere.
Incorrect. Life insurance not addressed.
Huh.
All of those are correct answers, and I will do an add-on of credit elsewhere. But the number one, and these are screenouts by Citrus Heights, where life insurance is not being addressed in the credit memo, and that's the number one reason that they're throwing it back. Now, all of these reasons apply, but go ahead, Lance.
Guys, when you're doing an SBA loan, the 5010 5K does not require it to be fully secured. The only reason I said and thought about it, Bob, every time I do a webinar, I have to think it changes so often. I have to get the right letter.
Well, it's going to be the 5010 6 soon, but you're off script.
Which will make it easier on me. But SBA doesn't require that it be fully secured on a discounted basis. But if it's not, life insurance is something that you have to consider.
Right.
In making it fully secure.
And they're not saying you need life insurance in every transaction. They're saying it's not being addressed in the credit note. But you brought up credit elsewhere. Let's bring this up. This came from Bob Carpenter, and he is saying the number one mistake lenders are making with respect to credit elsewhere is they're ignoring it. In fact, he even went so further as say it's now statutory, and if you don't address it, you're, quote, breaking the law. His words, not mine. But as he said, and I want to get the exact quote here. He said, quote, just address it. Make a statement for this loan on why they are eligible for credit elsewhere, and it should be okay. Failure, and this came from Vanessa Piccioni, head of Herndon, quote, failure to address credit elsewhere is a reason for a guarantee denial because by definition you have an ineligible loan. So they're all over this, Lance.
Guys, in your credit memorandum, if you don't have it, there needs to be, and most participant lenders already have this, Bob, but if it's not in your credit memo, there needs to be a credit elsewhere section where you specifically discuss that individual loan and how it meets the credit elsewhere requirement. One of the things, and it's like Bob said, and Bob Carpenter, double Bob, like they both said, you don't have to give a 20-paragraph explanation. It can be a brief
statement. A statement.
Yeah. But you have to address credit elsewhere, and it needs to be in your credit memorandum.
And you can go to the SOP. There's 4 specific guidelines. You can say it doesn't meet our collateral requirement. It's a startup business by definition. That's it. Yeah. But there, amortization, fully amortized loan, and it doesn't. They're not going to be picky about what exactly that you chose. The 2 test standards, you have to address it. That's the number one error. And number 2, it cannot be uniform across your entire portfolio.
Well, and when you see information from House and Senate members, Bob, that's a question they're always asking SBA.
Oh, yeah.
How do you meet credit elsewhere?
And it will change. They're going to come out with new guidelines. That was not specifically mentioned. Let me go through the talking points that Bill Manger, the associate administrator, made. He said the new administrator, the hearings will be done this summer for Jovita Carranza. These guys, it is a political appointment, so they love to give the standard political speeches. But this was a good thing. I think we all need to remember half of gross domestic product comes from where? It comes from Main Street. It comes from small business lands.
Well, I'm not surprised by that, and it's certainly relevant when you see the importance SBA. Guys, we used to not be a cabinet-level agency. SBA didn't, and now it is. And right. Now Congress talks about SBA all the time, so very important part of our economy.
I mentioned the regulations. They should be in the Federal Register tomorrow, so we will know exactly what SBA will be able to fine you and who they're going to be regulating. So that'll be out there. They mentioned the memo of understanding with the OCC. They used the word regulation. SBA is definitely now in a regulatory mode on this industry. There will be new express rules this fall. He did not say what it was, but it seems it's going to go up to the $1 million level. he talked about 504. Lance, um, the 504 program is at 3.98% for the 20-year debenture. How is that affecting your shop?
Bob, I'm seeing more 504 opportunities than I have in my entire career. You know, the 504 product is alive and very well with the low debenture rate. I think it's at the lowest rate it's been, Bob, and I could be wrong, 30 or 40 years.
You're technically wrong. 2012 it was 3.94, but that's splitting hairs.
It's an incredibly low. It's an incredibly low debenture rate. I actually have customers walking in the door asking for the 504 product, where prior to this, I would look at a project and say, hey, this is a good fit for 504. I actually have borrowers coming in and say, hey, what about that 504 loan? So the 504 activity is stronger than it's been in a long time.
They talked about the 504 job creation opportunity zones. Now it's going to increase from one job for every $85,000 of loan. Manufacturing's up to $125,000. So just make sure that you are in line with that. Lender match I discussed. The ability to, based on the credit score, they're going to put in process to make approve those loans faster. Also, the 50-10-6 will be released fall of 2019. And what the intent is, they're going to strip out 7A, 504, ITL, and they're going to put those all in separate SOPs, Lance.
Well, two great things, Bob. They're going to make it, you know, the 7A is going to effectively have its own SOP now, which is great. The other thing, Bob, is I won't have to think so hard about which letter to attach to the 50-10.
At least initially. Vanessa Piccioni said that they're going to roll out a new 50-57 in the fall, effective January 1. There's going to be a new 50-55, so their SBA is rewriting all of their regulations to make it more user-friendly and clear, which we all want. Hey, this was interesting, and I had not heard this before. On the 912, they're going to a new system where instead of submitting fingerprints on a card, you go to a site and you do your fingerprints, and then they electronically transmit those to SBA. That's reducing the clearance time from 30 days to about 2 to 4 days, Lance.
Yeah, I think that's incredible. Right now, there's a place locally where you can go in and there's electronic submission of fingerprints, and it cuts down the 912 clearance process significantly.
They talked a lot about reviews. I mentioned the $10 million threshold. That means you will be under the OPRM notice that will be published tomorrow, and you will be under more regulation. The CDCs are now on every 2-year cycle, and SBA is simply gearing up. Lance, they did get funding from Congress for additional oversight, so they're staffing up, and we should know more how that will look tomorrow. And again, just to reiterate the credit elsewhere, I'm going to repeat this. Just address it, make a statement for that particular loan, and you'll be okay. So that's I wanted to emphasize that.
Hey, Bob, we have a webinar coming up on managing your Paris score. Guys, now's the time to get it in line, because with more oversight, you want that Paris score to be as low as possible.
Yeah, that's absolutely true. Also, they talked about invoices going out for review, so you're going to be getting those invoices, and hopefully it's not too much of a shock. Hey, I put this chart together yesterday, and this is a continuing conversation. Oh, thank you, Joseph. This is continuing conversation. And I took these numbers just from SBA's annual financial statements. And I know there's accrual accounting and other things, but I just simply took 2 line items. I took what are the fees paid in 7A on guarantees, and that's that top line, and what are the guarantees paid by SBA to the lender. So the top line are borrower and lender fees. The bottom line is what the agency has sent checks back to you. $1.2 billion difference, Lance.
Yeah, that doesn't surprise me. Now, we could get a bad economy and that number could flip a little bit, but the SBA program is not only paying for itself, but providing additional monies to SBA. I mean, most of you, when you look in your Paris score, one of the top items, Bob, basically it's a net income item for SBA. It's where it calculates your guarantee fees paid, ongoing fees paid, minus your guarantees that have been paid to you as the lender, and most lenders are probably going to find themselves in positive territory right now.
Yeah, and this is a story I'm going to be following very closely over the next couple months, and the reason why this is important is the administration has put in a line on it that says, hey, we need to increase that subsidy of $70 by $99 million. We all know where the number came from. It came out of O&B, out of a black box calculation. We don't know what went into that number, the assumptions, and we're never going to get it. So what I'm going to be doing over the next couple months is talking about what my perception is of the numbers. So on just my rough little surface, SBA is doing very well for the U.S. taxpayer.
Well, Bob, it looks to me, and this is just a fun thing, it looks like they should lower the guarantee fee to me, Bob.
Oh, absolutely. Okay, let's go to the questions. Does the SBA deal with or evaluate repair and denial issues differently if the loan was a scored product?
Repair and denial issues are not generally created by the SBA credit score, the E-Tran credit score, or whether you underwrite it fully. That really doesn't make any difference. Your repair and denial issues come from, as an example, not doing a timely site visit when you have a loan that goes into liquidation, or not dispersing funds according to the SBA loan authorization. They're usually required by an action that you take that's contrary to the SBA loan authorization, or a servicing action that you don't take. So the answer is no. The evaluation of whether or not there's a repair or denial is not impacted by whether or not the loan was a scored product.
Thank you for that. Any other questions that we have, Joseph? No? That was it. Okay, we obviously talked about the debenture rates below 4% and upcoming industry events. Do we have Chuck Evans coming in real quick? No, he's not coming in. Okay. And these are the regional events. Obviously, we're at a regional event today. Take advantage of one year. Lance, this was a great event. You got all the local SBA people. So especially the Mid-America, Texas, when you go there, you meet all the district directors of all the Texas, the Region 7 or wherever, Oklahoma, Texas, Arkansas, et cetera, et cetera. So you get the local buy-in from the local SBA officials. We interviewed the district manager out here. She's part of the Inland Empire branch, and for our podcast, and that was wonderful. Plus, you also have the buy-in from the national SBA office. So you get to meet them, you get an update of what's going on. I've been pushing those. And finally, Lance, what do we have coming up for professional training?
Well, of course, they're re-releasing our certification courses, and the closer course, again, was able to bring home a national award. And Bob's underwriting course is outstanding as well, plus we're releasing the SBA Express training course. These certification courses provide an in-depth discussion of each of these topics, and I encourage you to get your staff signed up for these.
Very good. And Lance, we're going to be announcing our 1050 webinar, and those are some of the other things we have to do. And with that, thank you all for joining us, and we'll talk to you next week. Thanks a lot, Lance.
Thank you. Have a great weekend, and Bob, have a good time in California.